Video today. We are doing the week review for this week. So this is the second week review I'm doing. Today is currently Friday, but I'm recording this for tomorrow because I won't be able to do it tomorrow. So this week was fire. We had every single day we had a win. I did not get the results that I really wanted, or that the model presented, but I still ended up green. So we'll see. We had ups and downs this week, but we are gonna learn from it and become even better for the week ahead. So let's start it. So we came back all the way and we are almost at zero, which is original balance, and within that process we have made a little bit too much on this day. So we have extended the 30% consistency rule, meaning that we now have to make $3,200 right now in order to be eligible for IPOs without breaking any rules. So we are slowly going to climb back up to that. First I'm going to show you the trades that I took and everything I learned from them, and then I'm going to show you how it should have looked if I fully followed my rules. Basically what I did was I went back to replay without watching the charts. Of course I did trade the charts, those, but I forgot, I can't remember every single move every single day. So basically it was like starting a new basically like trading a new week. So I'll show that as well, what were the differences and everything. So first let's start with first day, which was Monday. This whole week was pretty good in terms of price action. I did manage to make some bad mistakes, but we'll see. So here first, what I want to improve is how I marked out because of my stop loss being so wide. I decided to determine a low hanging fruit way below than it actually was, which was a mistake, just to ensure that I can get like a solid move. It wasn't here, it was somewhere around here, I think. So yeah, there's no need. So in the future I'll definitely first establish a low hanging fruit before me deciding my stop loss and entry. But this was the first trade I took. It was a solid 1 to 1.5. Sorry. Okay, let's get into the second one. So here I made a mistake of setting my stop loss too close. So we had a break structure right here, and we were going to inverse this fair value gap. So this entry right here and this entry right here was both good. My mistake is that, so basically we swept out London highs, which were equal highs, and then we gave that confirmation for entry to the downside. However, what my mistake is that I set my stop loss above these bodies right here, when in fact I can see that this highest point that actually swept the liquidity, we can see the price retraced back into those wicks and then moved down to the downside. So the logical place for the stop loss right here would be at the high of this candle or just above these bodies, so that I is sure that price can potentially reach into these wicks and then go down, or it can use these wicks as a PDRA to move down. As you can see, many times these wicks actually work like a fair value gap, for example. So as you can see right here, for example, we have a bunch of wicks. It reaches up into those wicks, moves down. Same over here, we have wicks, it reaches into wicks, moves down. Here as well, after we created these two wicks, moves into wicks, moves down. So yeah, those wicks work like a fair value. For example, just like here, we also have these wicks, price reaches into the wicks, moves down. That's why we use wicks as a determination for an entry setup. For example, what I wanted to say about this, you can see where I exited right here. The low hanging fruit was, I think, this, like right about here, close of the 15-minute fair value gap. Okay, so that's why basically I bottom ticked this one. That's what low hanging fruits do. Stop loss was supposed to be here, and then low hanging fruit was, I think, around here, or this low. I didn't mark it out, which is also another mistake, but I took this on my phone, which is the reason why I didn't do so. This week I didn't trade my funded, even though I was supposed to, but I'll explain why I didn't do it. So yeah, this is the first trade, just two tight stop loss in order for this trade to play out. We still ended green on the day though, so it's fine. but we are looking to improve on that. Then this one, once again, this time my stop loss was a little bit too tight. Even though the trade played out, I wanted it a bit larger. And then the second trade, again with the stop loss, yeah, so here I also would have wanted a larger stop, even though it played out. So let's do the first trade. So the first trade, what I did was, instead of exiting around here at 1.5R, I decided to try end the whole day within one trade, which is kind of greedy of me, because this was the only target that we had. So, and we gave a V shape, so I was like confident about that we are going to reach this, and I wanted to make enough of the consistency roll just in one trade, which is a mistake, obviously. So once we started pushing down, I decided to put my stop loss to break even, and I got stopped out, as you can see. But you'll see how I would actually place this trade like on a better way. The real place for a stop loss is on the low of the candle that gave me the inverse, but we'll see in the later. So yeah, here instead of exiting at 1.5R to secure my funded payout, to secure my profit on the funded, considering the consistency roll, I decided to be greedy and aim for this, and then I made break even on this trade. The second trade was a sweep of London highs, and then we also swept a lot of liquidity to the left, and then we gave a break structure and an inverse on the same candle, and this trade also succeeded. I was aiming at 1.5R, and I also didn't mark out low-hanging fruits, which is my bad. But my stop loss, I would put it at the high right here, not actually like this above the bodies. I wanted it at the high, so I was a bit lucky there, but it should have been on the high right here. Then okay, let's get into the Wednesday. So Wednesday, we had only one setup, and I wouldn't change any single thing about it. We had a reach into the Asia Wicks, and we had a answer. We had a move to the downside, and then yes, this was an entry, for example, right here, but we inversed and gave break structure, but we closed London. So I decided we have, or my model actually is that if London closes, we wait, or if it's like 50 minutes, 20 minutes before closing, we don't enter, we wait. And in this case, we waited, price reached back into London Wicks, and then gave a break structure, which was a very clean entry. My stop was above the bodies, which is very nice. That's where I was supposed to put it. And then for the long hanging fruit, we also had a clear target, which is we had a low inside the fair value gap, meaning that we can target the low of the fair value gap so that it fills it completely. As you can see, that's a really nice trade, straight to the point and straight to the target. Yeah. And then the last day for me trading was Thursday. Here, that's where I made the too much money. So the reason I made too much money to short everything right here is because on both trades, my stop loss wasn't where I wanted it to. So on the first trade, even though it played out, this was a low-hanging fruit, and even though it played out, I wanted my entry to be here. That's where it was supposed to, because we had, right now, you don't see it, but there was a small fair value right here, and we inversed, so I was supposed to enter here, and my stop loss was supposed to be above this body right here that gave the break structure, the inverse. And as you can see, while I was trying to do that, my stop loss right here would have, with one contract size, which is the minimum, was offering me 0.7% risk, which I did not want. So price ended up dipping down, and then I realized I'm too late, so I just need to enter. So I set my stop loss to this price, which was where it was around 0.5%, and then I just entered. The stop loss had no actual reason to be there, so I was kind of lucky on this one that it just went straight down. So yeah, this is how this trade looked. Then the second trade, we had that same thing as well. So the second trade, we reached into London Wicks, and then we gave an inverse, and that was my entry. My stop was, I would like to have to put it above the bodies right here, but it was around 1%, so I couldn't risk less than 1% on this particular level right here. So my stop loss was then moved above the inversion, and it was still not enough. It was like 0.7% here, but I couldn't risk it and put my stop loss around here, and then to ensure that I get a 0.5% risk, because then I would be stopped, as you can see. So I decided to put my stop above this level, above the inversion. So those are two places where you can put a stop. This one is the safer one, and then this one is the second option, but still okay. And as you can see, I ended up hitting take profit on this one. I aimed at 1 to 1.5, even though my low hanging fruit was this one right here, and I made too much money on this one, and that's why I increased my consistency rule. So yeah, that's basically all the trades. Today there was also a trade, but I did not trade. I'll show you also why. So let me get now into how it should have looked. So this is how it should have looked. We would have made a lot of money if we traded my evil. The reason I did not trade my evil is because I just realized today that I was trading it wrong. So what I did was I tried to actually where I was supposed to exit at low hanging fruits, I didn't exit there. I just set my stop loss to break even and tried to aim at much bigger RR, and I also used a much larger stop loss to ensure that I get like a clean stop loss, and then I wanted the whole move, which was not how I trade my model, which is why I got up to -4% on my evil. So I'm going to fix that in the future. So let me get straight through every single trade that happened here. First day, NQ, we sweep out the Asia high and we give break structure on this. So this was the correct trade that I actually executed. I think that my stop loss was also good and everything. It's just that my low hanging fruit was actually down here, which is not real. My low hanging fruit was actually the 50-minute close of the fair value gap, and I'll show you that right now in TradingView. So this is where I did the analysis. This is the day, correct? So right here, we can see in the 50-minute time frame that this was the close of this 15-minute fair value gap and also the start of another lock. So this was a key point where price can retrace back up, which is why I set my, which is where it should have been. Sorry, we moved a little bit. Okay, here it is. I'm still getting used to moving this around on the MacBook. So that's where the real low-hanging fruit was, and that's where I was supposed to actually mark it out. Okay, this was the first trade. This is how it should have been placed. And then let's do this next one. We sweep out London highs, and then we give an inverse and a break structure right here. I would have gotten on the break structure, and as you can see, the real placement would be this, just above these bodies, because they have been used so much times, and now we can use, so we use them once right here, moved to the downside. They gave us our entry, but then you can realize we have new bodies right here, so it should have reacted off of those. And to ensure that we actually like get a good stop loss, it's not to put above them, but actually maybe above the 50%, as you can see, maybe above the 50%, because that's where they react, like they react off. But the safest one was maybe at the high right here. So yeah, and then the low hanging fruit, which I didn't have marked out, was actually this low right here, which is the only 15-minute low right here. And as you can see, relative lows connected right there, so that's the low hanging fruit. No other lows right here, so that's why I chose that one. Okay, so this is this, and then okay, right here. So that's why. Let's get into, so this is this, this is this. Then the next day we had a sweep of Asia low, instantly 5-minute inverse. That's your entry target. We have a lot of, look at this liquidity, a lot of liquidity. So we also have a fair value gap right here. That was the cleanest target you could have taken, and that's what I aimed at in this case. As you can see, my stop loss was not here. My stop loss was at the low of the candle that gave me the break structure, because if you look at this as a low hanging fruit, then it's much more, you can put your stop loss a bit larger to ensure still 2.4 R on this one. We would have exited right here on the funded, and then the next trade was after we take out London high right here. We don't do anything, but then we move up and inverse and gave a break structure, and at that point you can enter there stop loss at the high right here, and then take profit to the downside here. Low hanging fruit in this case was also, I'll show you. Okay, so the low hanging fruit right here was the low of this fair value gap, because we have a low inside of it, so it means we will fully fill it out in order for it to go up. So that's that. That's the reason why this was the low hanging fruit. If I can actually get this correctly without it moving all around. Alright, damn. What the fuck? Yeah, right here. This was the low hanging fruit. So in this case, what you would do is, we can only aim at 1.5 R, because that's what we don't go less than that, considering that this is our stop loss. So once it hit low hanging fruit, you just set your stop loss to break even, and that's it, like the restaurant. So yeah, that's it. You would have made 0.75 on this one, 0.75 on this one, that's 1.5, and then 2.4 on this one, and 1.5 on this one, which is 3.9. Next one, I need to speed this up a little bit. We only had one trade. We reached into Asia. I wouldn't change anything about this, as I said. Then we gave an entry, but we have to wait for London to close. London closes, we have wicks, reaches into wicks, break structure, that's your entry, stop above the bodies. The target is, as you can see, we have a low inside the fair value gap, so you target the low of that fair value gap. In this case, the 1 to 1.5 was a bit below, but as I've said to you guys, once we reach the low hanging fruit stop loss to break even, as you can see, it reaches the take profit and moves up to the upside. So this is clearly why it was a low hanging fruit. Then the last one that I traded, we swept out Asia high, gave an inverse right there, that's your entry, stop above the candle that gave the inverse. Target in this case, a lot of relative equal lows right here, so sorry, a lot of trendline liquidity, and then you have relative equal lows, that's your target, so a bit more than 1 to 1.5. 1.8 was this, I think. Then price reaches into London wicks, gives us an inverse. Your stop has to be above the bodies, as I've said, and then targeting the low hanging fruit, which was in this case right here, which is the 15-minute fair value gap close. So you can see the price reacts off of that really nicely, and I'll show you that on the chart as well. Sorry for this video for being a little longer, but it is what it is. So it's this one, I think, yeah. So as you can see on the 15-minute time frame, I don't know why it moves it like this. Yeah, so we have a low. Am I talking about right? Yes, I am. So we have a low right here inside the fair value gap, so we will reach the low of the fair value gap before going up. So that's basically all. And then today we also had a setup, but you would have to put your stop a bit larger, and I didn't want to trade because I wanted to preserve capital and everything, so I wanted to be safe and to keep my profits. But as you can see, I'll show you right now, today also did give up a nice setup. So we sweep out London low right here, and after that you will look for either break structure or inverse. In this case you don't get neither of them. I was looking at this at the moment, but then after I saw all of this, I left, and I didn't even want to watch the charts. But as you can see, price moves down right here and then gives an inverse right here to the upside. So that right there would be your entry, so this right here, and you would enter something like this. So let's say you enter there. Stop losses would probably be below this, and that's where you would get stopped out if you try this, unless you are aware that this is a consolidation. You want to put your stop loss a bit larger, because it needs to like sweep this consolidation in order to go up, and then you can target low hanging fruit, for example, which is the London high, or no, let me see, actually the low hanging fruit would probably be just these highs right here, because they're relatively equal highs on the 15-minute time frame, So yeah, after that point, if you have a trade like this, let's say like this, something like this, below these bodies, let's say, and then you would have to put your stop loss to break even at this point, and then your target would be 1.5R. You would close there all positions. Or if you didn't want this because it's still consolidating too much and you want to see a break out of that range or something like that, and this inversion is too small for you, which this isn't a really good entry, but then you get a break structure right here. Or if you don't want, if you are not sure on the first high, you have the second high right here. Price gets broken through, you get a break structure, and that's your entry right there. Stop loss below these bodies, like a couple of bodies right here, or at the low right here, and then you can target. In this case we closed above these bodies, so the next target is this right here. So right here is your low-hanging fruit in this case, and you would set your stop loss to break even at that point. But as you can see, price went through it and to take profit, which is 1 to 1.5 in this case. So yes, there was a setup you could have taken. Yes, you could have lost as well, but anyway, this. So for example, my mentee took this and lost right here 0.5%. I told him that today is not the most probable day to trade, and I want to trade, but if he wants to, he can find a setup, but just to lower his risk, which he did, and ended up losing a small trade, but that's fine. He's still up on the week, so it's good. Basically, sorry for going all like fast and everything, but this video was too long anyway, so yeah, thank you guys for watching this video, and I hope you learned something valuable for yourself.